very much. Thank you very much, Sean. Happy Saturday. I hope wherever you are, having a wonderful Saturday and wonderful weekend. Uh, we are going to do our weekly analysis, starting with the economy, and then we review the markets, what a week it was, and what a week, what a month October was, and here, start of November, which is the seasonality-wise, supposed to be the stronger 6 months and strongest 2 months. So here we are. I'll do have a few lessons for you, which couple of them will be specific trading lessons and mostly for very short term, like a futures trading. So I will share that with you, and we will continue with trade of the week, and I'll have some ideas about or educational on ETF of the week and stock of the week, and we finish it with the earnings. So with that in mind, let's start with the economy. As I mentioned last week, obviously the big news was the FOMC, and what is their attitude? The market was on hold, and when we talk about markets, we basically talking about it's not just the stock market; it's bigger than that. We're thinking about how the interest rates and the bond market will react, what is happening with gold and precious metals, what is happening with dollars. So they're all interconnected, and so the market got some answers. And then Friday we had the non-farm payroll about the employment, which we'll review today. So basically, as you can see, the initial jobless claims every week, they've been going down. So I highlighted because it shows that since pandemics, like this past week was the lowest. Then the continuing jobless claims is the lowest it's been. And then the ASA staffing index, it has been the highest it's been. So even compared to 2019. So, and also the retail, you can see we are actually ahead of where we were in 2019. So those are important things to remember. We're still, again, lagging box office, and it's understandable. So as I mentioned, our whole behavior has changed. One thing is, for me, it's important, and I'm watching this, is that global commercial flights. And this is as of November 4th, and you can see it's very difficult to compare because we're still not 100%, but month over month and week over week, it's been, it has gone down a little bit. So there's still that concern, and obviously we like to go back to the normal. So this is something I like to watch to see what is happening with the overseas event, with the global traveling. So the big news, besides the FOMC, which Chairman Powell suggested that they will be tapering this month, they still sounded very dovish. So, and that's why when we look at the markets this week, you shall see that how all the markets really behaved positively, every market, and we call this Goldilocks. So everything looked good because bad news is good news is good news. So basically, whatever Powell would have said, specifically because he was dovish, the market really took it to the very positive way. So, and they still, the committee still thinks that they do acknowledge the inflation, but they still think this is transitory. By middle of next year, things are going to settle. So the whole focus, remember, that what the Fed is trying to do, get back to the full employment. So that's why the Friday's numbers were important. So what happened on Friday, and we had discussed this last month, and we noticed that there was a big effect from the Delta variant, and that should have changed. Again, it was the summer, the seasonality, but also the Delta variant played a role, and employment should get back more positively. And as you can see, the payrolls raised, they were raised 531,000 compared to expectation of 450,000. And majority of this came from the private sector, especially from the hospitality and leisure. That was really big. and the service area was pretty big. So that was the big effect. And again, the other thing was the revision of the last 2 months job growth was revised up to 135,000. One of the things I really pay attention is the average hourly earnings, because the inflation is in my mind. So I want to see, all right, if the food and gas, everything is going up, what is happening with the earnings? And you can see it rose 0.4%, which is about 4.9% for the whole year. And actually, the total hours working per worker, it also increased 0.2% in October and is up 4.2%. So what that tells us that it has, as far as the combining these two, you can see it has increased 9.2%. And what that means, why we look at this is we see that the earning power is there to stay ahead of the inflation. So in the long run, though, the wage inflation could also become a problem on its own. But for now, this is what we are looking at. So those are good news. And the negative side is basically these mandates for the employers, like President Biden has asked for employers of companies of 100 employees or more having the mandates for like the vaccination. And obviously that's a big battle, and which you could have seen from New York to some other states, that what is happening, that's clearing the labor shortage. Either they're not allowing the employees come, or the employees don't want to go. So that could be a challenge going forwards. But right now, as you can see with the curve, we are in the right direction. And although we are not back to where we were pre-pandemic, still got ways to go in a sense, but that is the right direction. And the 3.5 or 3.6% unemployment numbers are that's the goal for the Fed. So this is the reason, again, I share the calendar, because you want to be prepared. As I mentioned, I usually don't like to have a trade right before the economic numbers come out. So I watch it, and then I'm proactive. So what happens, like on Tuesday, we do have the PPI number, and that's important. That's at 5:30 a.m. Pacific time. So you want to watch that. And again, the inflation is the forefront of the big subjects from all the central banks. And even now, the average investor is talking about that. So PPI number is important on Tuesday, and on Wednesday, it's really sibling, the CPI, the Consumer Price Index. So we're looking at the Producers Price Index coming back to the Consumer Price Index, telling us where are we standing. So we want to watch for that Tuesday and Wednesday. So let's dive into the sentiment in the markets and basically see where we stand. As you can see, the bullish isn't there. It has continued after really the fear of like September, beginning of October. Now we have moved. We are at 41.5% in American Association individual investors, and we are, on the other hand, 26% of them are bearish. Then we come to the CNN fear and greed. I mean, exactly a month ago, this is where we were, right at the bottom, kind of. Yeah, it was actually October 4th. And here we are. So these are times that I've said it, that the barometer is going, the same thing with the euphoria at 112. We are not really completely extended. But as you shall see with our charts, we are extended, but this could continue, and we will discuss that. So it's not like time to go and short the market and sell everything, but these tells us just be cautious. And seasonality wise, as I mentioned, we are in a positive month, so that's what also there's a lot of positiveness with the sentiment, but we have to be, again, prepared. You always have to be prepared. We always hope for the best, but prepare for the worst. So this is the week we had. Again, we had the closure from the FOMC with the non-farm payroll numbers. So basically the biggest benefactor was the technology with the rates, the interest rates that we have been talking about, it was important to watch it for this week. So NASDAQ and the FANG stocks, when you think about NVIDIA, you think about Tesla, it's unbelievable how fast they are going, becoming a bigger portion of the S&P and NASDAQ 100. So basically, they were the best performers as far as the major indexes. And then S&P was up 2, and Dow Jones Industrial was up 1.42. So when we look at all the segments, you see everything is positive. This was really Goldilocks feeling, and the biggest benefactor of, again, the job numbers and the interest rates with the small caps. They actually have broken out. So broken out of their consolidation for months and months, and they were up 6.9, and they were the best performers. And when we look at advanced decliners, and it's like thanks to Wednesday and Thursday and Friday, you can see that they were 2490 to 1,000. So that's convincing. As far as the dollar, was pretty flat, but we shall see the last 2 days what happened with dollar, which was really interesting. And the biggest news was the T-bonds, the interest rates, and they were the catalyst. And crude oil was down a little bit. They did go down to 79 area and bounced back at the end of the week. And you can see because of this, and a little bit again, oil plays a big role, so the inflation was down a little bit. But gold had a nice rally, and we will discuss, of course, the gold trade. So we will review that. So let me go to the charts. Let me start with my again, my daily, what I look at, basically, and number one thing I look at is the exponential moving averages. So I emphasize this 8-day moving average for short-term trading or swing trading. I very much value the 8, and 8 is a Fibonacci number, and that's what I have, 8 and 21 moving averages. And what you can see, I've combined this with the Fibonacci, and I've used extensions on top of that. So this is a high of September 2nd, right before the Labor Day, and we went to low of the beginning of October. So I have drawn the Fibonacci numbers. So after the low of this, and then we had the higher low, once we broke all those moving averages, we haven't looked back. So that's why I said, these are the times that, as I mentioned, and you shall see the commonality, that it's maybe you want to take some profit, but the markets can be insane and go much farther than you can think. And if some of you are old enough to remember the late 90s, and I was in business, I was managing portfolio at that time, and it's like late 90s, 1998, I would see these things, and this is the internet, really, it was not a bubble, but it looked really heavy, but everybody was talking about this. And the same thing with the assets right now. You think about cryptocurrencies, people are talking about options, people are talking about the stocks. So there's a lot of asset classes, real estate, everybody's looking at it, and there's like no end. So basically we have that conversation, but that doesn't mean it ends. So about 1999, I had really moved to a very conservative portfolio, and I was very cautious. I was in the value investing at that time. And of course, the rest is history. NASDAQ was up 85%. It kept going up. And my reasoning was, I shared this before, that like my taxi driver in London is giving me tips. A realtor from Michigan is talking about tips about Pfizer and the Viagra, how Viagra is going to double at no time, which that was the peak actually, when that Viagra news came, and a little bit, as soon as she said it, it's interesting, that was the high. So I'm familiar with that, but I'm also remember how the markets continued to ride without me. So basically what you want to do, you don't want to short yet. You can hedge yourself. If you're going to be in the position to be long, have your hedging strategy, or start selling toward, in this situation, while everybody else is buying. I know a lot of institutions, this is how they take their profits gradually without anyone noticing. So, but there is nothing here that can tell you that it's time to short. I mentioned a couple of weeks ago about how we need basically a little rest. You know, you can't just hike and continue walking up and running actually up in the mountain. And we did have the rest on that, again, the high of the September, beginning of September. You can see this is my double top really. We rested and we just continued. Now, this looked like an evening star. We came down and look where we stopped at, right at the top, and that became our support, that resistance, and that 8-day exponential moving average. So as long as we're moving this way, this is continuing. So I've drawn these Fibonacci numbers. You can see that 161.8 at 47.14. Believe it or not, it got hit right at that point. If you look back and look where was the high, it was 4711.75, and this was 4714. So basically that's 1618. Now, if you're looking for targets, if we break through this, this could be a next target. But if you're gonna come down, then these are gonna be your targets. Again, I would watch the 8-day. Now, that's the time if you're gonna do shorting, or again, if you get confirmation, basically if everything else is in confirmation, then we could use this 8, and we can use the 21-day exponential moving average as our down targets, which is pretty much close to the top of where we were in September. So, but as of now, you don't really have a pure selling signal. The money is there. There's just so much money is coming in. And again, the good feel is there. But again, being a conservative, I am being a day trader, I'm just taking advantage of that, which we will talk about in our trading. Now, you can see that the Bollinger Bands have opened up, but we are embedded. And the stochastics are embedded, the trend in MACD is up. We have hit the top the Bollinger Band, but we are above the 18-day moving average in S&P cash. NASDAQ, the same thing, embedded. So there's a lot of strength. We're just hugging that Bollinger Band. So we could eventually get really tired. Just, you know, I don't know if there's going to be a crash, or all I'm saying is we could have retracement and a little pullback. The big one would be perhaps the 18-day, but I will watch the 8-day moving average as a pullback, because the moving averages are really expanding. So let me go back here. So you can see, again, I call this bow tie. It's a great time to start entering the positions. And now we are really running away from the 50-day moving average. So we want to, for healthy markets, you do want to have a pullback at least to the moving average. Because if it continues, then we're really extending that rubber band. And that's what we want to be prepared. Russell, big winner. We've been in this consolidation for so long, and all of a sudden, this is what happened. So now we are embedded. MACD is up way outside the Bollinger Band 3 days in a row. So Monday and Tuesday, we're going to be a little cautious to see if we're going to have a little pullback. So I wouldn't buy in that where we are, the Russell. But I would like to see a pullback, and then if everything is confirming, then maybe you can add to your positions at that time. And this is what I was talking about. Look, for the weekly, this is where we had been, and finally we just went outside the Bollinger Band, and we need to have pullback, but we are overbought on weekly. But we did have a breakout. So now next week we need confirmation, the second mouse. Dow Jones, the same thing. Trend is up, MACD is up, the stochastics is embedded. Transportation was unbelievable week with transportation. So they were up Tuesday, huge, 6.8%, 6.2% or so, huge move. But the the momentum is down. The trend is up. So this gives us a mixed message right now. So we are settling right now to see if the momentum will move back up. So I'm watching the transportation. Again, it broke out of its highs of May. That had been the challenge for the longest time for transportation. And when they moved, they really moved big. This is the interesting thing that we had the class on VIX on Wednesday. And watch this, the markets are all-time high. Again, they're going up. VIX was up on Friday. And I had drawn, if you recall, this has been my support line. And we hit it on Thursday and we bounced back and we have broken above the 18-day. Of course, we are under the 100-day, but there's, you see these divergences and MACD is flattening and we are oversold in stochastic. So these are the messages I'm looking. And as I mentioned, this could be the best of two worlds in the sense that if you have your position, this would have been, good time, maybe do a little option strategy on VIX, because again, if you have hedging, your portfolio is going up and your insurance is going up. I mean, it's been strange, and I will talk a little more. And look at the volatility of VIX, the VVIX, the 110 is very important number, 100, but 110. And here we are at a little bit over 110. We broke above the 18-day and the momentum is going up. The MACD has been flat, but it's like breaking out. So it's really interesting, dynamic markets we are in. And look what happened to the 10-year interest rates, yields completely, we talked last week how important was that, this 18-day was becoming a resistance and it stayed resistance. So remember the 2-bar moves, we stayed below 18-day moving average for 2 candles and we could not break through, and that's what happened. So now we're getting to oversold and we are outside the Bollinger Band, and we do have a support here. So we shall see what's going to happen with that, because now when you look at the 10-year notes, it's the complete opposite. We stayed above the 18-day and we broke above 18-day, and here we are outside Bollinger Band, but we have the resistance here. So I don't think we are out of the woods yet, but the rates, basically what they're telling us is for now, it's been down, but there's a lot of question marks. I don't think we are, just having a dovish, Powell completely answers our questions, and especially he'll be speaking next Tuesday, I think Monday and Tuesday, he will be talking, so markets will be watching that. And look at the 30-year bond. So with that inflation, thinking that, hey, not a big deal, we're going to manage it. Here the bonds are moving, and the 30-year bond has become embedded, and it broke above the 100-day. So what we want to do, whether we'll have this confirmation on Monday, would it pull the 10-year note, which is important for the mortgages? So, and then basically, it's the interesting thing is that's what now by now. Look what happens. The bonds go up, the yields go down. XLF, not so good. They had 2 days of selling, and again, basically, they're at the mercy of the rates, although they're still in an uptrend. But the MACD has crossed, so trend has changed. They're uptrend, but the trend is trying to change. We're still above that 18-day moving average, and as you can see, we went from embedded, we went to oversold, overbought, and then the momentum is down. So we want to watch the financials next week. The dollar. All right, so we look at, again, the bonds are up, interest rates down, and the dollar is up. Dollar has had a very nice day on Thursday, and then we are hitting the Bollinger Band, and then MACD, we're getting embedded on the stochastics, and he's trying to cross. So as I mentioned, Mr. Goldilocks here is the dollar is up, and on a weekly, for the first time in a long time, we actually trying to break above that 100-week moving average. It is kind of overbought embedded mixture, make these up. So that's why next week we'll see if the dollar is going to continue. And usually the higher dollar is not good for the stocks, but with the environment that we are in, they could go hand in hand. Now, the dollar is going up. Look what happened to gold. Dollar is up, gold is up. And then Friday was up very nicely. We broke above the 100-day, and we have broken above the 18-day. So here's, I mean, so far what I've talked, everything, interest rates down, markets are up, all segments of the markets, the bonds are up, dollar is up, VIX is up, gold is up. And on a weekly, we broke over the 18 weeks moving average, and MACD is trying to cross on gold. Silver was up as well. We broke above the 18-day, but this 100-day is providing a challenge. And that's the reason I mentioned, when we were selling silver here, if you sold puts here or you had a credit spread on the put, I mentioned last 2 weeks, this might be a good time to gradually get out of them. If you can get 5 cents or so, just close your position, enjoy that ride. So here again, this could provide a little the resistance. So, and on the other hand, we had a really nice ride in copper, but we've been camping on the 100-day moving average. So let's watch this. We are below the 18-day. We are getting embedded in stochastics, and that trend has changed. So the trend is the downside. And I'd like to talk about Bitcoin again. There's a divergence here in some ways that the momentum is going down while we've been pretty flat, but we are above 18-day, and we'll discuss a little more about Bitcoin in upcoming slides. Crude oil, as I mentioned, they had a sell-off and then they bounced back. They went outside the Bollinger Band. Momentum was up now and oversold, so we see we hit that 79. And like anything else, Friday, as I mentioned, everything is up, including crude oil. And energy also, it's getting really flattened and oversold. Actually, the momentum is pretty flat, energy stocks. I just want to share the last slide. Again, that's one of the reasons I like you to be involved with the commodities, and there are, granted, oats is not as liquid as like soybean or wheat or corn, but I just want to share this move with you. This is a weekly from July. It's up 100%, and every point is $50. So almost 300, more than 300 points. And this is one contract would have made you 45,000. And you see how it has hugged its Bollinger Band and it's just gone for a ride. Never really retraced that much, not even close to 18. So there are opportunities out there, and here we are. And it's completely embedded and MACD is out. So let's go move to the expected move, because it has been really interesting dynamics with expected move. As you know, we really value this weekly expected moves, and most of the time it behaves well. This is S&P. We get outside once in a while, and we went. I mean, this is actually Monday. We went outside of this, and then came back. So it stayed outside a little bit, but then we are inside, 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 and then look what has happened in the last few weeks. This is previous week. When yesterday we closed outside. The week before, the 2 weeks before, we closed outside. The week before that, we closed outside. So what happens when things like this? Remember, market makers, this is their living. So they're very disciplined, organized, and things like this, when the markets have these anomalies, they pay attention. So they can go, but eventually everything goes back to its reverse to its mean and behaves normally. So I don't know how much longer we can do this. This behavior happened before the pandemic started. So I would share, like, for instance, look what happened in the NASDAQ. It's almost 2 standard deviation. And the week before, and what has happened, it is something that we have to pay attention. Is the market really getting ahead of itself? So I'm not saying, again, it's a crash or it's big, but things like this make me think. As I said, it just makes me a little cautious when we have these extensions. I mean, you look at IWM. I mean, how could you explain this? It's just a huge move. And these are the things that, as an option player, you want to watch for. On the other hand, you see the Dow has been behaving right within its expected move, except here. But stayed touched actually its upper end, and it was all-time high. The same thing with the bonds. It's been unusual. We went close to that upper edge of expected move. Gold did go outside its expected move, which is, we will discuss the gold trade. I thought the gold will, right around here, it will revert, but it did not. But anyway, nice move. On the other hand, silver actually did go outside its expected move on the downside and bounced back. And the financials stayed within. They've had some moves outside, but they touched the lower edge, and nothing happened in energy. Okay, so let's talk a few lessons I have for you. One of them is, this old saying, sell in May and go away. And I had explained it. I shared the story. This comes from, really it's the farmers in the early 1900s, and, basically they would borrow money to go do their planting, and in October they pay it back, so the banks had the money to invest. So basically that's the idea of going May, which is the planting season, and start investing in November, come back because there's enough money. So basically this goes back to 1950. This is the record of if you invested from May 1st till November 1st, those 6 months. And this is the record for investing from November 1st till April 30th. So just want to share that with you. That's what has been a significant difference for investing seasonality. The second thing I want to share with you is something. I look at the internals, we look at McClellan oscillator, which I could discuss it maybe next week. And there's something called bullish percent index. It's based on actually point and figure. We have not discussed it. I don't want to confuse you because I think, we using candlesticks or we do the bars. There is Renko, there is Hakanashi we've talked about. There's so many different ways you can do dots, you can do lines. And one of the things is a point and figure. So this index came in 1950s, and basically in a nutshell, it looks at, again, the 3 bars. It's the X and O's that, as I mentioned, we can discuss it in another class. But the bottom line is the interpretation of it. And this is from the stockcharts.com, which I really like. And they do have actually a segment of their market analysis and of market indicators. One of them is the bullish percent index. And they look at different indexes and including the sectors. And what the interpretation is, if you're above the 50, then the bulls are in control. If you're below the 50, the bear is in control. If you go over 70% and more, then we are overbought, it's extended. If you go under 30, then we are oversold. And it's time for basically because it's oversold, maybe consider buying. So I thought to share that with you because this is what you get to see. So for the initially what it started with was the New York Stock Exchange, or the New York Stocks Exchange stocks. So then they went to NASDAQ and S&P 100 and S&P 500, NASDAQ 100. So based on just the interpretation of what we have seen, it looks like, again, everything is in a bullish mode that the charts are telling us. So you can see everything is above 50. There's a couple of them. I just highlighted this. This is the NASDAQ 100. And again, mainly we look at NVIDIA and FANG stocks, and then what happened with the other, like Microsoft. And we are at 73. So I just highlighted that. So it looks like we are back where we were right on the all-time high on September 2nd, right before we dropped. So we can see we are back where we were at that time. Just a food for thought, right? So I just want to share that with you. On the other hand, not everything else is like that. So some of them have divergence. S&P 500, or actually NYSE, you can go to stockcharts.com and look at it, is at a resistance, right, at about 65. So and a 50-day moving average resistance. So you can look at it, but I thought that could be helpful. Anything we can do, especially over the weekends, I encourage you. It takes you 5 minutes or so. Just have a visual, just a review. See what is there a common theme? Is there a good story here? So the next thing is Friday. We had the non-farm payroll numbers come. So this is more of a trading. If you are very short-term traders, you do the futures, and even if you do not do the futures, you can use it as a guideline. So these are the things, I mean, over the years, I have noticed trading the futures on non-farm payroll Friday, so it happens once a month. One thing I've noticed that usually there's a big move when the numbers come, and I apply that with the bonds, but since we're talking about S&P futures, I'll focus on that. So this is that 5:30 a.m. when the numbers came, and that's the 5-minute candle. So historically, what we found is that the low or high of the day are very meaningful. We've talked about the 60 minutes, the first hour. I tell you to draw your lines 75, 80% of the time, the high or low of the day is really based on that first 16 minutes. So that could give you nice guidelines. The same thing on the non-farm payroll, based on, again, you know, statistically, again, it goes back many years that I tried. It's just, you see this pattern has developed. You can use, this is a 5 minutes, you can use it in the 10 minutes. I could have drawn this, but I've noticed something happens and there's a lot of activities around this number. So this was Fridays. This was the low of the Friday, and this was the high, the first 5-minute bar. You could, as I mentioned, you can use a 10-minute bar, and it would have been this. But if you notice, this really played, we did go below this. Again, it's not 100%, but we did spend a lot of time toward the end, right in this range. And we closed, believe it or not, exactly where we opened on right at non-farm payroll when they actually were announced, and this is where we closed. So, I mean, if you were looking at it, just you did something here and then came back at the end of the day, you would have moved nothing. So, anyway, that's just, if you do the futures trading or even later, you can at least have some type of a pivot point for yourself. The third one, since we had the FOMC, I thought to share. This is pure trading, and this is a 11 o'clock trade. You can use it 2 minutes, 1 minute, 5 minutes. I use 2 or 3 minutes, and I call this, it's like a 1, 2, 1, 2, 3 trade. And basically, all it is whatever the move is, the first bar, once it reverses, it goes back. I put the moving averages here as well, which is interesting. We went back to the 20-bar moving average. So we have one wave, second wave, third wave. So the one wave, and then you have retracement, but not all the way down. and then the third wave is continuation of the first wave. So as I mentioned, it's a short term. You could even use ticks, but I use the 3 minutes. One wave, it retraces, and then it continues. And then, so if you would have played this, you would have been, if you went long, and let's say you didn't go long, you could also go short. So let's say 1, 2, and then the third way, you would be right at the 2 points. You would be a buyer, and you would have had another confirmation as soon as you went to high of the first, I mean, the 2 bars or so. It will be continuation, and this 20 bar moving average would have kept you in actually all the way to the end. So just again, I know that this is a mostly futures trading, but if you did even options, I do not recommend trading during the FOMC. Prior to that or after that, I like the Thursdays, but if you're really in it, I used to do this. I have to go look at the blog. I used to do a lot of this. So unless you're really in it or your risk is really much controlled, this is one food for thought. Or you could maybe do a little option play if you feel, you know, we already got our basically our box here. So if I know if I'm going to go long here, I get a confirmation, maybe a candlestick confirmation. If and it's a 20 bar moving average, if I'm going long, maybe I do a debit call spread and just stay with it. So just a food for thought. Okay. All right, let's talk about the trade of the week. And this week's trade, I'll start again with our gap play and the first 60 minutes, because I think you can make a lot of good trades and profitable trades, or at least good probability if you can use these two. So on Friday, again, options, triple witching, I'm not big on Friday's play. And as you know, but you know, this was a was not an option expiration, and we filled that gap, not only half the gap. And where did we bounce back? Again, I talk about closure. The markets, for some reason, they just love that closure. We filled the gap completely, and we bounced back. Now, we also had the first hour, and I use this. These are the purple lines, the first hour high, low, and high, and we stayed in it. The high of the first hour became the high up for the day, so you could use that as an advantage. The other thing I use also Fibonacci. So what we could use from that high, once we bounced back and we filled that gap, and that's another way you can actually use the gap for your Fibonacci numbers from the high to this low. When you draw the Fibonacci, guess where we reverted? Right inside the ambush zone. And again, if you do futures trading or you do some day trading or you want to do scalping, these are the things. I mean, right there you have the 3 different things you could use. I don't even have moving average here, so the space between the gap play, the first the first hour high and low, and also Fibonacci. So I just thought to share that with you. This is another thing. I took a picture of, you know, look at the FinViz. It's delayed, and some the VIX numbers are not precise, so I go with the colors only. But this was at 10 a.m. It was interesting for me. I saw a lot of things are going in tandem. Look, dollar was up at that moment, gold was up, all the precious metals, oil is up, indexes are up, bonds are up, VIX is down, and so the currency Aussie dollar is down a little bit. But these are the main ones I look at, right? So you see Japanese yen is flat to up, dollar is up, gold is up, crude oil is up, and then everything else. So that's why I said it's like the Goldilocks, which I mentioned. Now, let's go to the next. This is at the end of the day. Friday is 4:51 p.m. Eastern, 1:51 Pacific. Look what happened. Gold is up, crude oil is up, indexes are up, bond is up, VIX was up, and dollar was flat at that moment. And Aussie dollar was flat, and Japanese yen was up. I don't know what gives, but this was really interesting to see that everything is really, something has to give. So how could you have VIX up and the markets, as you noticed toward the end, obviously the markets were coming down, but I just thought to share that with you, just a food for thought. I'd like to analyze this gold trade, since it looks like a lot of you are doing this. Again, talk to you about my mistakes as well as, you know, my success, but some of the mistakes that I make, I'd like to share that with you even after all these years. So this was my daily on gold. So you can see this is Friday, and this is what happened on Thursday. As I mentioned, I usually don't like put a lot of value on Wednesday's trade on the FOMC, what they say. I like to see how the market reacts the next day. Now, gold is the ETF. It gapped up. So when we do our Thursday, it is a little difficult because we have gapped up. It's already big price movement, and we knew by looking at the Fibonacci numbers, first of all, we knew we are above the cloud. So that was positive. So I didn't hold my nose to go in. I just had to find the right time to go in. The second, so I didn't know this is going to happen, by the way. All I knew is this is a good support. 167 was my support. And I think we opened like 168 or close to that. Or 167 and 50. And then we went all the way to 168. And basically, the resistance was 169. So what I was going to do, I knew I'm not going to make a lot of profits, but there was a good odds that we will make it. So we go to that 60 minutes, and this is where we open. And my goal was, if we would have come down to this area, I would have actually buy more or something. So we opened here. We had a nice move, and then this is what happened Friday. So let's ignore Friday. Let's just stay on this. We are above the turning point. We are above the standard line, and we open above the cloud on the 60 minutes. So far, so good. So this is what I did. I bought 168, 5 contracts in 168. So I immediately put my targets. As you know, I'm all in. I don't put stop loss on this. You can if you want to do 50%. But the reason I don't, because there could be times like this on Thursday, and I will miss my Friday's move if there is any. So basically, this was on Thursday. I was losing. I was down, but I already put my targets, and then Friday comes, and as you can see, I hit my 100%er, and then I did a trailing, and unfortunately, trailing I did, it did go up and it came down, got me out, and then toward the end, it had another really nice move, but that's okay. So far, so good. I did that, and I also decided to go do a 167. So I did another 5 contracts, and basically the thing was it came close to that support at 167. That's why I was thinking it's going to have a nice bounce, and then my objective is again is 169. So I got in, and that was on Thursday, and then as you can see, actually this one got hit, but the next one, and then this was also a trailing that I got out. And of course, it continued. I think it was up another 40% or so after I was out. So basically, that was my second trade. So it was a nice day. When I look at it, I said, all right, I was proud of myself. And I was glad that it worked. And this is the mistake I made. And this is what I want. So I was pretty confident. When it was 167.5, I did also buy right around here. About 96 cents, 95. So I didn't buy, I put a limit. I always put a limit. And I put a limit for this 167.5 contract, and it felt comfortable. And I was managing my other positions. I had a lot of different things. So what happened, this actually got filled, and I had completely forgotten about it. So I did not manage my positions. And I didn't find out till after the markets were closed yesterday afternoon. So basically, I got into this, never saw this, I manage a lot of different positions. So I didn't even know I was in this position. So basically what happened, again, it was a nice, obviously nice. So the good news is, I stayed till the end. So I was up 139.8%. So I got in at 490 and the market value is 1175. The thing is, now obviously I'm going to be assigned. So Monday morning, I'm going to be a proud owner of 500 gold stocks that's going to be given to me. So I have to make a decision. Do I want to hold it? What if there's a big dive on Sunday and, then I have to make a decision. But that's not the point. It's not even the profit. The point is, that's the reason I say, manage your positions. Don't have hundreds of different things doing at the same time. As soon as you get in, that's when you put your targets. Again, granted, I would have probably made less money than this, and because I have my targets. But you know what? This weekend, okay, I gotta watch gold. I mean, it doesn't matter. I'm long-term gold holder anyway. But this could have been maybe Tesla. It could have been maybe something different. It could have cost me a lot of money. It may be volatile stock. So please, please, as soon as you get the confirmation, put your targets in. If you're going to do stop loss, do it right there. But manage your positions. Don't, forget like what I did. So anyway, just that's a lesson after all these years, still make mistakes. So ETF of the week, I like to continue the subject. We had the BIDO, and we've talked about that. And I just want to share a couple of new ETFs that come end of September and in October. They're not very liquid. The volume is not very high, but what they do, they actually invest in some other means of cryptos. So this is the Invesco, Alarian Galaxy, and what they do, they actually invest in ETPs, exchange traded products, and they actually, like, let's say they hold GBTC. So if you don't want to buy that, they will do it for you. So I thought to share this, just put it in your itinerary, maybe you want to follow. The assets under management is very small at this time. Again, it's 12 million, but it could be some interest. Obviously, everybody's talking about these things, so you might see something come in. You can see there's 10% mutual funds and different digital and actual stocks. There's a Coinbase, and this is the chart of it for last month. Less than a month. So you can see this is Hakinashi chart. So basically, we don't even have MACD for it. So that was one, and the other one is the ETF called CRPT, and that's also, again, came in September 20th, 30.5 million under management, a little higher expense ratio than Sato, and a little more liquidity. You can see it does invest in stocks related to more stock oriented. It's all equity, by the way, to cryptocurrencies. And this is the chart. It's a little longer, so we can have a little MACD here, but this is where it has been. So again, the volume is 43,000 when you compare to 15,000. So just a little more education. Maybe you can put in your watch list, just see the behavior, how correlated it is to the Bitcoin futures, for instance, or Ethereum. All right. So the stock of the week I chose it was started. I want to share this with this is Friday's most unusual option trade. So you can look at it. Basically, it doesn't gives us huge. You have to look under the hood. Granted, 87% are calls, but again, you want to make sure they are at the asks, not the mixture, not the spreads. So you can see these are the most active ones. So I noticed the CCL was at 86%. So what I was looking at is after, as I mentioned, with the economic news and non-farm payroll, you noticed that we had the leisure hospitality was like the one of the biggest. They had I guess 185,000 or so of them. I think it was around that number. So that was very positive. And again, with the vaccination and the boost and, all the other things, opening the economy. So that, believe it or not, the travel services, they were the number one. So 8.42%. And that explains mostly, we had the Airbnb, by the way, that came up with their earnings. But you see that Carnival Cruise Line was had a pretty good option activity. So I said, all right, let's take a look at that. This is Carnival Cruise Line. I really like the Sizzle Index. Oh yeah, there was 2.3 times the average of last 5 days higher option activity. And I'm looking at this, there's a 389,000. And the majority of it is, yes, it isn't called 317,000 versus 72,000. So far, so good. I also look at there's about 40% is at the ask and 31% at the bid. So there's more people buying the calls rather than selling. And it was 28% of the puts were on this call side, ask side, and 31% on the bid. So there was, a little bit more selling the puts. So this looked good. So there's some positiveness about the cruise line. Then I thought, okay, there's that Carnival Cruise. What is again, we look at the leisure, the travel, it's a cruise line. Who's the competitor of Carnival Cruise Line? So how about Royal Caribbean? And I'm looking at that. Oh, that was a good movement. That's like even more than average. The question is, it's much less volume in the contracts, but similar idea, even more so. You can see that 20% versus 13 and 11% versus 24%. So this looks like relatively more positiveness in Royal Caribbean. So if I'm interested in this and I feel the industry is in the upper momentum, so I want to compare these stocks. And so next thing I look at is the chart. So I don't want to go 1,000 charts or two. So I look at Ichimoku. You can see that the DMI has been positive. It started, but we have been below the Ichimoku cloud, and we had been below the turning line and standard line. So, but the momentum is up. So far, so good. The thing I look at this, again, it was up 8% or so, 8.6%. Gap up, beautiful. So you could actually either play a gap, which we have discussed, maybe we'd review it if you like, about a bracket play on this for Monday. One thing concerns me is actually two things. Number one, we are still inside the cloud. And number two, we've had the higher lows. So when this is a higher high, then we got lower low. So there's been a lot of indecision here. And now the lagging line just broke above the cloud. But we have a lot of resistance. When I look at this, we were at 32 for the 52 weeks high, and we are at like 24. So 24.79. So what I'm looking at is, well, let me take a look at Royal Caribbean. When I look at this looks much cleaner. Very much, again, similar story, the gap up, but I see a lot more strength in Royal Caribbean. Now, the question is, of course, as a maybe value investor, you could look at the CCL. The fundamentals is still debt. Both of them have closer to debt to equity. So there is still some fundamental, but idea is if you look at projecting for the future, from the chart point of view, there's more strength in Royal Caribbean. The reason is we've been above the cloud. The lagging line has been around the cloud comfortably. The trend has been up. We've had higher lows. And we're actually close at 52-week high. So it is telling us that there's a lot more strength. Now, the thing you have to watch, though, is, as I mentioned, this is also could be a bracket play. There's a resistance here. So we want to watch this resistance, but once we break this, there's a lot of clear sky. This one, we got here, we got here, we got a lot of resistance ahead. That means a lot of sellers gonna come into the picture, might take some profits. So anyway, just a food for thought, maybe a weekend study for you. I just want to share that with you. So with that in mind, I'll just did a scan on Russell 2000 for your shorts. I mean, for your squeeze play, if you want. We went with the largest market cap in that order. So just a few ideas that if you want to investigate more. Again, the earnings, the major ones have come up, but we still got some exciting earnings left. So, you know, if you are into AMC and PayPal or Roblox, or you like the Neo and Coinbase or Fubo, they're coming up. Obviously, Wednesday is a big one. Will be Disney. Yeah, right here. Disney will be coming. Affirm has become a really exciting, interesting story. We have Blink and battery electrical, and then so anyway, I just thought to share that with you. These are some volatile, and then the AMC again, BioNTech, Neo, Coinbase, some of the numbers for you. Oh, Palantir, that's a big one. You're involved with that software company, PayPal, and Walt Disney. All right, with that in mind, thank you very much. I appreciate you being with me. I hope it was informative. There are interesting weeks. I know these are positive weeks are coming up as far as seasonality goes. But like I say, when I coach soccer, you know, all my kids from when they were 3 or 4 years old till they were 18, and I would tell them, you always have to be on your toes, tippy toes, we used to call. You can never be flat-footed and just be stationary in the soccer field. You've got to move all the time. And the same thing in the markets. You constantly have to be tippy-toeing if you want to be involved with the markets. I mean, if you are a long-term investor, that's a different story. You still want to obviously manage your positions, but if you're a trader or swing trader or a short-term investor, always on your toes. And there's nothing wrong with taking some profits anytime. All right. Thank you very much. Sean, I'm ready to open up for the questions if there's any.